And that is Jonathan Krinsky. He's the chief market technician at BTIG, no doubt listening, champing at the bit to want to get in on this conversation, Jonathan, because technically you do see a little more pain ahead. You think we're going below 4,000 on the S&P 500. What are you looking at?
Yeah, so I think a big part of that is just this lack of capitulation that we've seen. I think if you look at some of the survey metrics, investors are talking a bit bearish. They're saying that they're bearish, but I think if you look at positioning and some of the fund flow data, it's telling a bit of a different story. So I think maybe investors are talking bearish, but not quite acting that way. We've seen over the last 3 weeks over $5 billion in inflows into equity ETFs. We've also seen, if we look at positioning from S&P E-mini futures traders, they're pretty much as long as they've been over the last decade. So not consistent with the big panic lows we saw in 2011, 2015, or 2020. And then, really, if you look at the volume profile of the market, we look at declining volume as a ratio to overall volume.
Yep.
And if you look at a 20-day moving average of that, it's just not as elevated as we've seen. We haven't seen any of those big 90% down days. And I think the reason for that is because there's been a rotational aspect in the market. We've been talking a lot about wanting to favor some of the cyclical areas, some of the value areas in the market. And we still think that's the case, such as banks and energy. But ultimately, in order to see that true capitulation, you're going to have to see kind of the baby get thrown out with the bathwater. We don't think we've seen that yet.
I mean, Jonathan, you heard my point. I know Josh has got a question for you right after this, but you heard my point, Jonathan, at the beginning, which was we started the year with one of the weakest or the weakest starts to a year forever or in 50 years, depending on what group of stocks you're looking at. This is kind of before we started to see Vladimir Putin make these moves, by the way. By the way, something that's been going on in the Donbass region for more than 8 years. There have been fights there for 8 years, but it almost feels like the market wanted to sell off for a variety of reasons coming into the new year. Do you think the tape would be this weak if it wasn't for what's going on in Russia, or would it be the same market if there was complete peace in eastern Ukraine?
Yeah, I think a lot of what's going on in the market is what started well before Russia-Ukraine. I think if you look at the ARC names that have kind of taken the brunt of the high growth, long duration selling, I mean, those peaked almost a year ago, right? So we've seen kind of this rolling rotational bear market that started with some of the growth areas of the market. Up to this point, the holdouts have been kind of the mega cap names. Some of the FANG names have held up, and then some of those cyclical value areas. So to your point, I think, the Russia-Ukraine news could certainly be exacerbating some of it, but I don't think it's all of the issues that's going on under the hood.